If you want to learn the secrets of becoming wealthy, this is the video for you. Rich Dad Poor Dad is a New York Times bestseller and has sold over 32 million copies worldwide. The author Robert Kiyosaki unravels 10 key principles which will enable you to become rich and get you out of the rat race. So let's have a look and see what this book tells us. Robert Kiyosaki narrates the story of being taught by two key figures quite early in his life. Robert refers to his friend Mike's dad as his rich dad and his biological father as his poor dad. Why, you ask? Simple. Although his poor dad was a well-educated university professor, it was his rich dad from whom he learned some key principles that enabled him to think and get rich. In this book, Robert draws a stark comparison between both his dads and their mindsets about money. The first principle that Robert learned from his rich dad is that the rich don't work for money. They make money work for them. Robert's poor dad asked him to get good grades and get a well-paying job in a good company. On the other hand, Robert's rich dad asked him to figure out how he could own the company. Robert goes on to say that the poor and the middle class are governed by fear and greed. It is the fear of running out of money that makes them work a 9-to-5 job and get a steady paycheck. Then greed takes over and they work harder to get a better paycheck to pay for their better lifestyle. This gets them trapped in a rat race, and since our wants increase with our earning potential, and this turns into a never-ending vicious cycle. The second principle that Robert talks about is financial literacy. Unfortunately, financial literacy is never taught in our schools. It's not about how much money you can make, but it's about how much money you keep. Robert talks about how the rich accumulate assets and the poor and the middle class accumulate liabilities. So what are assets and liabilities? Assets are anything that put money into your pocket. This could be a check from a rental property you own, a business, dividend earning stocks and bonds, basically anything that would give you active or passive income. Liabilities, on the other hand, is anything that takes money out of your pocket. Contrary to popular belief, the house that you own and live in is not an asset. You may pay for maintenance, mortgage, property tax, and since it takes money out of your pocket, it is considered a liability. If you had just one takeaway from this book, I would say it would be the need for you to build assets and try and reduce your liabilities. As simple as it sounds, this is the key to building long-term wealth. The third principle is to mind your own business. The rich focus on their assets while the poor and the middle class focus on their income statement. The rich have a razor-sharp focus on building assets which will generate income. This income is further invested into more assets, thus reaching a critical mass, and soon income from the assets covers all their expenses. This is the key to financial freedom. Assets could be in terms of a small business, either online or a traditional shop, real estate, etc. Personally, I believe in an online business because the initial capital is very small. The fourth principle that Robert talks about is that the rich focus on improving their financial IQ. Financial IQ involves learning about 4 important topics. Number 1 is accounting. Improve your financial literacy about accounting. How to read a balance sheet, profit and loss statements, etc. Number 2 is investing. Learn about investing and various avenues that you could invest in. However, be cautious of where you invest your hard-earned money and do your due diligence. Number 3 is understanding how markets work. Supply and demand govern how the price of goods and services keep fluctuating all year around. A product that works really well in one market may not do so well in another. Learning about the laws that govern your business is critical. The rich build corporations. If you have a business and make decent money, a corporation is the way to go. It enables you to avail of tax benefits that an individual just cannot do. The fifth principle is to pay yourself first. Our laws are such that the taxes are deducted from the source of our funds. We then end up paying our monthly bills, mortgage, and for shopping whatever we need. Whatever is left, if any, goes towards our savings or investments. Robert says that in order to get rich, always pay yourself first, and then cover all other expenses later. This way, you're sure to save and invest some money. One clever way of doing this is to automate your savings every month. The sixth principle is to pay your brokers well. Good financial advice is hard to come by these days, and sometimes it can end up saving you loads of money. The seventh principle is to always buy luxuries from assets and not loans. Robert once wanted to buy a Porsche for himself. His wife told him to think of ways of how he could build an asset that would pay for it. In the end, he did. He ended up building a business that would pay for his car, and once the car was paid for, the business continued to bring in cash flow, thus increasing his assets. The eighth principle is overcoming obstacles. We all have our mountains to climb, but Robert points out a few obstacles that seem to stand out the most. The biggest one is that of fear. We may be financially literate, but if we have a constant fear of trying out new things and investing our money, we will never be rich. The next one is cynicism or self-doubt that one definitely needs to overcome. The next obstacle that we're all too familiar with is laziness. We've all been there, but overcoming it needs some mental grit and focus. Another one is bad habits. A bad habit could be any distraction that takes you away from your goal. In this day and age of online streaming, one could easily spend crazy hours binging on shows which you could rather have spent on doing something productive. The last one is arrogance. Humans tend to think that they know a lot more about a subject than they really know. Sometimes, realizing that you don't know enough about something and either trying to learn more or getting help from a mentor could be the way to success. The ninth principle is to choose heroes. By having heroes to inspire you, it becomes easier to tap into your raw genius. People emulate heroes and aspire to become like them, believing in their principles and what they stand for. Comment below and let us know who inspires you or someone that has made a significant impact in your life. The 10th and final principle is to teach others what you know. You know the old saying, give a man a fish and you'll feed him for a day. Teach a man to fish and you'll feed him for a lifetime. Robert believes in giving back to society, and I personally believe in it as well. However, the idea of giving should be without the expectation of receiving something in return. Pay it forward. These are the 10 principles highlighted in the book Rich Dad, Poor Dad. The description below has affiliate links to the physical and Kindle editions on Amazon. If you enjoy the summary of this book, Rich Dad, Poor Dad, hit the like button and consider subscribing. If you'd like us to provide you summaries of any other books, feel free to leave your comments below. Thanks for watching.